Hey everyone, and welcome back to my channel. So today I'm back in London and I'm interviewing One Planet Capital, which is an investment firm. We're going to cover off raising capital, working with high net worth, ultra high net worth investors, and so much more. It's going to be a really interesting episode. Do not go anywhere. Let's get into it. Hey everyone, welcome back to my channel. So before we begin, I'd like to say a big thank you to today's sponsor, which is Casita Properties, the UK leading company when it comes to discreet off-market buy-to-let sales, and all their information will be in the description below. So I'd like to welcome Anthony and Ed of One Planet Capital. Thank you so much for joining me, guys.
Good morning.
Good morning. Well, we are here to talk about your company investing into a green market, EIS, should I say so. Guys, could you just give an intro to the audience to explain a little bit about your business model and who you are?
Okay, Shane. So I'll probably talk about the green economy part. So our fund is 100% focused on investing in companies in the green economy. So companies that make positive environmental impact. That's our winning idea. So we think that over the next 40, 50 years, there's going to be huge development in that market. And that's the way to make some money and also do some good for the planet. So there's a combined element. There's also some great tax breaks. So
we're on an EIS fund, which means that if you're a UK taxpayer, UK citizen, you can enjoy fairly advantageous tax relief. On the way into the investment, approximately a third will be offset against your income tax bill. There is CGT free, so capital gains tax free on the way out if you've held the shares for more than 3 years, and there's also loss relief as well. So roughly speaking, you're sort of gambling, in inverted commas, roughly a third of what you put down and invest into the company or the fund.
Cool. So what made you, let's kick this off with why you started this company. So what was the opportunity that you saw within this market that's made you obviously build up One Planet Capital?
So me, Anthony, and our other business partner, a guy called Matt, have been entrepreneurs for the past sort of 20 or so years, and off the back of a few exits that we've had personally in businesses that we've started or been involved in, we got into the angel investing space. So we've been doing it as a kind of hobby, I suppose, for probably the past 7, 8, 9, 10 years perhaps even. And we decided about 18 months ago to formalise the approach. So rather than doing it in a sort of ad hoc way, we decided to put it under the umbrella of a VC fund. And also about, I suppose, just over 2 years ago, perhaps 3 years ago, I suppose, we became quite passionate and quite taken by the green climate change, environmental space. We saw that there was a lot of things going wrong in the world, and also a really great way to make money. I think it was Larry Fink recently who was quoted as saying the next 1,000 unicorns are not going to be tech companies or search engines, they're going to be companies tackling climate change. There really is an amazing opportunity here to do some good, plus also make some money.
yeah, if I just add, I think the timing's pivotal as well. So 5 years ago, 10 years ago, governments didn't seem that serious about climate change yet, whereas now they're really genuinely legislating. And I think that's the biggest thing that's changed for us now, that with that legislative drive, and it's now law, carbon reduction targets, path to net zero, it's inevitable, it's happening. And that is the biggest thing that's changed and why we've jumped in now as well. So I think that timing point's really picked up too.
Well, it certainly has a lot of benefits. Now, what I would like to ask, and I suppose for the watchers, is when we think of investing, a lot of newbies will think, what returns am I getting? So with the market that you're in, obviously a lot of people are going to think, especially more retail, and we're going to get onto high net worth investors shortly, but if someone was looking to get into this space, into that green market, and take advantage of these tax wrappers essentially, what kind of returns are they looking for? Because obviously we jump to the back end of it. That's what a lot of people now, that's the first thing they think of. Okay, for my money, what am I getting back? Rather than essentially the mission in between that of what it could do, and taking a fair return on that. So what kind of returns could we be looking at, or what wrappers are there?
Yeah.
Okay, so you always need to take a blended approach when investing, and that's the same if you're investing into stocks and shares. You wouldn't just buy one particular stock, you'd buy a number of different stocks and spread that risk. The same is true when you're investing in unlisted EIS companies. So we'll be investing our investors' capital across between 10 and 12 companies probably, and you'd expect to get around a 20% IRR per year, and those monies will be wrapped up and invested for, between sort of 5 to 8 years probably. So you'd be looking at more than doubling your money over the period your money is invested. There'll be some companies in the fund that don't do so well, and there'll be others that do amazingly well, and they obviously offset against those that don't do quite so well.
Mm-hmm.
Yeah, if you look at the last 20 years, VC investing delivers on average between 2 and 3 times your original invested capital.
Yeah.
It's actually remarkably similar in returns profile to private equity funds that you can invest in. The difference is how the return is derived. So, because these are very early stage companies, a few of them will do okay, and then there'll be a few superstars. Whereas in private equity funds, there's more consistent performance, but not spectacular.
Right.
But the headline is it's 2-3 times your money. Time horizon, call it plus minus on 5 years.
And what would the entry level be on something like this? So, to get involved, is there a minimum entry in funds like this?
Yeah, so listen, for us, we keep it very low. So we've got a minimum entry of £10,000.
Okay.
There's a lot of other EIS funds that can usually be £20,000. The good thing is we're trying to make it accessible. We think the more people invest, the more people are creating environmental impact, which we think is a good story. But £10,000 as part of, let's say, some other investments, some tax planning, I think it's a nice way to start gradually.
Yeah, awesome. So I want to touch on, because I know this is something we spoke about off camera briefly, is working with high net worth investors. Okay, it's almost like finding a diamond when you can work with these individuals, and everyone wants to partner with one and go on to do projects. For those watching, what would you say has been pivotal or really important in your brand and business to draw in high net worth investors to feel that they're going to be working and investing in a trusted company? What's been the game changer?
The big difference with us is the 3 people who run the business. We're entrepreneurs by background. We're not finance professionals. We're not venture capital specialists of 25 years. 3 of us have all run businesses, startups, and exited companies successfully. So we're very proud of that. We're different, might not appeal to everyone. But I think when you're talking to angel investors and high net worth, they often come from a similar background, and they understand that kind of conviction that we have when we look at a business. So it's a different approach. I'm not suggesting it's the only approach that should exist in the market, but for us, we're a fund that's run by entrepreneurs, business people. That's the key thing, I'd say, from my point.
Yeah. So I suppose to answer your question, how do we go about finding high net worths to invest in our fund? Like Anthony said, or was alluding to, half of it, I suppose, is through our network, friends of friends, contacts of contacts, etc. We are also lucky enough to be working with a number of the large IFAs in the UK, so independent financial advisors, and they've got a network of clients, individuals, high net worths that they help manage money on their behalf. So we would receive monies and clients through those contacts.
We spend a lot of time also speaking to prospective investors to really explain what's an example portfolio look like, what are the recent companies we've invested in. I think there are other funds out there that don't take the time, and we're trying to get people confident. If you look at Ed and myself, 4 or 5 years ago, we weren't doing so much of this type of investing, and we were learning the ropes. And I think now we've demystified the space. It feels very accessible to us, but we want to try and help other people go on that journey as well.
That's awesome. It is scary, actually. When you first start looking into this type of investing, you're investing in companies where you can't get your money out immediately, and that's an important point to highlight. It's not like the stock market where you can sell your shares at whenever the market's open. You can sell your shares. This is different. This is investing for the long run. So
you've got to make sure, really, if you're going to consider this type of avenue for investing, what I would say is you'd have to class it as almost dead money that you can allow to go out for a certain period of time. It's almost like a war chest, and what I mean by that is it's capital that you can afford to lose potentially. So is that kind of, this is very much that capital that, look, if you need to rely on it, this isn't the money that you'd be putting in.
And that's the same with all investing.
Yeah,
really. But yeah, I think the key point is if you need or think you will need access to that capital, then this is not for you.
Yeah.
But the barrier to entry is fairly low, £10,000 for us. So if you can afford to invest £10,000 and leave it there growing for the next 5 years, then it is a good place for you.
Yeah.
But highlight again the fact that you need to have a blended approach to investing.
Yeah.
So some in property, some in stocks and shares, and some in.
I think the other thing I'd add is, I mean, yes, it is locked up for a period of time. It's not a liquid investment, as Ed says, but you do get that tax break up front. So if you put in 100 grand, into a fund, and you're lucky enough you pay, or unlucky enough you pay that much tax, you immediately get 33 grand off your tax bill.
Right.
So there is that cash flow aspect in the first year that whilst your money's locked up for 5 years, you get 33k advantage right in that on day one once you invest your funds, which is really attractive. So.
No,
The
that
exact
is.
amount depends on your individual status and where you sit in terms of the tax bracket.
Yeah.
But yeah, they're significant.
So it's all very interesting, and I want to just stay on the high net worth investors at the moment, because I know this is very interesting and many people want to learn more about it. But I think also there's an important point when working with high net worth investors is that you have some form of checklist or they go through an onboarding process. So for those watching that might be just about to work with their first high net worth investor, how important is it that you onboard them correctly, paperwork is done, they can meet a requirement, if you see what I mean, they hit that criteria? How important is that for you before taking on a new investor?
Yeah, critical. I mean, we've spent a lot of time actually, probably a bit more than expected, just building up, some rigor, some process in the fund, around the way we do due diligence, about the way we assess companies. Because if you want to onboard a large institution or a large individual, it can take different shapes, but effectively you're going to go through some sort of due diligence process yourself. So if you're not ready for that, I mean, it's a disaster. It's not going to happen. So, we've spent a lot of time trying to work on the structure of the fund, some processes around that. And like I said, it took a bit longer than we thought, but without that, we couldn't get into the likes of some of the companies and the individuals we have.
Yeah.
I mean, we're a regulatory approved business. The FCA mandates that we do things in a proper fashion. So we have to do the due diligence on the companies that we evaluate and then eventually invest in. And we have to do the KYC, the Know Your Customer piece as well. So we have to ensure that the funds that the customer is going to be investing with us have been earned in a proper fashion.
I think the time it takes as well is that the bigger the ticket size you're looking to solicit, the longer it's going to take. So we've been going sort of just coming up to a year.
Yeah.
The first fundraise was last October. The second one's coming up in March. We're talking to really important cornerstone high net worths to invest in the fund and really help us, really grow it. But it takes time. And those conversations have been going on for up to a year, and they're like, yeah, we're getting confident, but it's going to take more time. So I think that's the thing. We've started up, relatively small. It's a sort of a bit of a slow burn.
How have you found your investor pool? Is it mainly UK based, or have you been able to branch out abroad, Dubai, Hong Kong?
No, because we're an EIS fund, it's only relevant to UK taxpayers.
Right.
I mean, that's not to say that you couldn't invest in our fund if you lived and paid tax abroad, but there would be less of a reason for you to do so.
Yeah, not much of an incentive.
No.
You lose the tax break.
Right.
Like Ed said, I mean, we've got an investor in the fund who, they're like, I don't care. I still think it's a great idea. We want to be doing it. Clearly, the tax benefit is important.
Yeah, absolutely. So we're going to take a slightly different turn. It'd be good to, anyone that comes on that is active investing, entrepreneurs, I always like to give back to the audience in regards to maybe where you would put your money in the day and age that we're in, because there are so many options. We are bombarded with, like we were saying off camera again, Bitcoin has the marketing behind it, which might oversee sort of this new market, well, not necessarily new market, but the green market and the opportunities, especially with the tax wrappers. So if you both had £10,000, for those watching that might be sitting on some cash but want to make a sensible decision, what does that look like for you if you had £10,000?
So if I had no assets when I was given £10,000, I would probably invest something like a third in property, a third into stocks and shares, liquid stuff, and then probably a third into the type of stuff that we do.
Yeah.
I would say something like that, and possibly a little slither in the crypto space.
Nicely diversified, yeah.
Yeah, listen, Ed said it's number one rule for investing is that diversity. I think specifically if you're looking at this kind of VC investing space, I think the areas we're super passionate about, climate change and green economy, and we co-invest in our own fund, because of that. Outside of that, there are a couple of other areas we really like. I mean, medical technologies, some of the angel investing we've done, and also some insurtech, sort of spin-off stuff from fintech as well. We've kept active in that area, but for us the primary winning idea is obviously the fund we're looking at. But I think diversity, and then within that space, when you look at VC, choose a couple of niches.
Yeah, it's nice to have a few safe bets and then leave yourself just a little bit of sort of play money that you can that you don't mind losing, but has the possibility to grow exponentially.
Do something exciting.
Yeah.
That's interesting. So, I mean, what is the end goal when it comes to One Planet Capital? Obviously it's building a sustainable business, making big changes. But what's the outcome? As business owners, where do you want to take this business?
Well, for us, it's all about impact, positive impact on the climate, on the Earth's environment, and really, single-digit millions is not really going to cut it. So we need to be raising north of 50 million to have a meaningful impact upon the Earth, and also financially for us as founders and the people, and of course our investors as well. We want to return stellar returns to our investors.
Yeah, I think at heart, it's just the idea that we can really be providing capital to companies that are really going to make a positive change, are going to generate fantastic return. I think that's the inspiring thing. The more we do that, the more we scale it up, the greater the impact. I think we also want to try and change opinions out there. I think people have always viewed the environmental space as a more charitable endeavour, and I think 5-10 years ago, it was impact first, return second. But again, reference that legislative change. It is different now. It's a genuine commercial opportunity to make money, and that's one thing we want to try and get on the radar to people as well.
Yeah, amazing. I mean, I'm finding it really interesting because it's a different market. I think it just needs, when we look at things such as crypto, it's backed by such big marketing that it can oversee some of these other really good areas to invest in and essentially diversify. So, to gain this exposure, and obviously we're giving back to the audience who hopefully are going to go away, do some more research and go check out One Planet Capital, is, what kind of top tips have you got for people stepping into the investment world when there are so many options? Because what I like to crunch and sort of squash is that, there isn't just property, there isn't just crypto, there isn't just the stock market, there are other avenues such as what you're doing. What would be your top 3 tips from both of you for those getting into the investment world?
I think, so for me, I think it's about doing a bit of research and scratching beneath the surface. I think you can be foisted things by an IFA and sort of told this is a good idea. One thing I'd really advocate is try and speak to people at the companies you're talking to. We're very open. We're happy to spend plenty of time explaining the companies we're investing in, how EIS works. And I think you've got to do that for your own peace of mind. And I'm not saying that just to promote our fund, but anyone considering an investment with us should look at 2 or 3 of our peers and speak to those companies and get a feel for it and what resonates. So I think scratching beyond the surface for me is one thing that's always stood me in good stead. So
yeah, I think you have to invest generally in things that you understand if you're doing it yourself.
Yeah.
If you don't understand the area or areas in which you're proposing to invest, then give the money to a professional who can make those decisions and choices on your behalf. It's easy buying shares and it's easy buying stocks, but it's difficult to know when to exit. What else would I say is very important? The blend obviously is super important for me. Don't just buy one stock. Don't just stick to one particular area. And then what else?
And just offer one is to do things gradually. So again, I think a mistake I made many years back was to just get very excited very quickly. Jump in, over-invested in one particular year. Listen, it didn't go wrong, but it certainly sort of gave me sleepless nights.
It could have gone better.
Yeah, so I think for me, again, if you're thinking about EIS investing or the green economy, do it gradually. Start off, do a 10k investment, build up. Same applies for any other sector, any other fund, and have a look around. And then the following year, build up another little sum. So if you've got 25k, think about deploying it over a couple of years. There's no need to completely go for it.
Well, there's always a feeling of rushing now, isn't there? There is a pressure to
FOMO. I mean, it's a great driver.
Exactly.
I definitely experienced that myself with the whole crypto craze. You feel like compelled to invest now.
Yeah.
And it's dangerous. You just got to take a minute, breathe, and think.
Well, it comes back to slow and steady wins the race. And many people, I'm sure you're exactly the same, is many people who have made a lot of wealth are in their 40s, 50s, and it's been done over a period of time with calculated risk and like you say, understanding what you're investing in, because there is this huge FOMO. If I don't put my money in, then I'm missing out, and that's very speculative. So there's some amazing takeaways there. Just to finish on, how important has it been for your networking? Because if you're not meeting people and you're not talking about your business, essentially who knows about you? So how important has that been for you too?
I mean, it's absolutely crucial, and thank God now we're able to do things face to face like we are here today. It was okay doing it over video calls, but it's so much more. It's so much easier when you can talk to people face to face. But it's all about people.
Yeah, it's a real privilege. I think we get the benefit, and I do think it's a real privilege of meeting all the target companies, meeting the management teams, people with passionate ideas about growing companies. We meet a lot of investors. We're building up a network. To me, I joined Ed and Matt, the founders, a little bit later, and even over the last 6 months, it's been one of the most stimulating kind of journeys, starting to build a network in a relatively new area. So, as Ed said, I mean, it's the core of what we're doing, and it's a real privilege.
Yeah, awesome. Well, I'm really excited to see where you take this company. We're definitely going to stay in touch. And look, guys, I want to thank you so much for coming onto the channel. It's been awesome. It's been a big learning curve for me, and I'm sure for all the watchers as well. So just before we wrap it up, if people do want to reach out, get in touch, find out more about your business, where can they go?
Well, thank you for having us. If you want to find out more, please visit our website, oneplanet.capital.
Awesome. Well, all the description will be all in the comments below. Sorry, the links will be in the description below. And guys, thanks again for joining us. And everyone who has watched, we will see you all very soon.